Hello, everyone. So today I have the pleasure of having with me Rebekah from Cardinal Finance. And Rebekah has been in the business for a while. She's been in the business for 20 years. She actually worked as a processor before. So it's good because she's seen different faces of the loan officer kind of work. So Rebekah, one of the things that I want to discuss with you right now, I mean, we're late into March in 2023, but what's coming out in the news is this. Pretty much what they're saying is that if now they've made some changes that if you have low credit scores and a low down payment, you're going to be paying lower fees and possibly lower rate compared to someone with a higher down payment and better credit scores. Can you explain that a little bit more so that people can understand?
Absolutely. Thanks, Rafael. This is a good topic. I think there's a lot of myths out there. And to clarify a little bit more, I think it's more so that if you have a less desirable credit, you're going to pay a better rate than the person with better credit. No, that person who has better credit now is going to pay more fees. And that person with the lower credit may be paying less fees, more so to kind of bridge the gap. And I would say even out the playing field a little bit and create more opportunity for those who want to enter into the home ownership game. If you have less than desirable credit, or you're looking in the medium counties for income levels that meet certain things as a first-time home buyer, you may receive a better rate than you would possibly would have received prior to May 1st, 2023. That makes any sense.
Yeah. So when is this actually taking place?
Believe it or not, it's already taken place.
Okay.
It's fully in effect May 1st, 2023, but the banks have to implement this. We can't wait to the 11th hour to do so. That May 21st, that May 2023 deadline is for loans that are delivered to the agencies. So their loans are currently in effect. So who's not affected is anybody who has closed prior to or has an active mortgage. But if you've been in the mortgage process probably since January, February, likely your lender's already implemented many of these changes because it takes time to deliver these loans to the agency after they close. When I say agencies, I mean Fannie Mae, Freddie Mac.
Okay.
And what I'm referring to is loan level pricing adjustments, which are known as LLPAs, which is that cost. So the lenders can't throw this into effect now because this is based on the deliverance date. So that affects the loans that are currently in processing and active. So technically it's in effect already. It was announced in January.
So it was announced in January. So what's the hysteria now? Like, why do we have an hysteria? I guess because the May 1st date. Explain the hysteria between the inside in the industry. You guys already knew about it in January, already implementing it. Why the hysteria now?
One, there's misinformation out there because as I referenced prior, is that most people think, oh, well, because I have a better credit score, I'm going to pay much worse rates than that person before. So that's creating a little bit of a panic effect. And that deadline, that's putting it fully in effect. There are other changes that are about with that is on cash out refis, second homes. Those rates are going to also be affected as well. They'll be paying more to borrow money. But more so, I think the shock factor is people have always had this incentive. If you have a good credit score and you put 20% down, you get the better rate. Yeah, you're still getting a better rate, but you're going to pay more. Believe it or not, if you're paying 20% down, putting 20% down, and you have a 740 score or 720 score or better, you're likely going to have more adjustments to your rate than if you were to put 10% down.
So what you're saying basically, it's if somebody's putting 20% down, has 740 scores compared to somebody that has 680 scores, putting 5% down, that person with the higher down payment and better credit scores is probably going to get better terms, correct?
The higher down payment will still get better terms, and the better score, better terms.
Okay.
It's just they're going to pay more.
It's just they're going to be
That
paid more
person,
compared to before, but what they're doing is basically taking some of that to compensate so that somebody with lower credit scores and a lower down payment does not have to pay as much as before. Is that correct?
you're on trend, and you got it right. I hate to use the word subsidize, as that's what a lot of people are saying.
Okay.
I just like to keep it black or white, as that person that has that lower score was penalized for having a bad score.
Okay.
Having a good score is still always a good thing,
Yeah.
right? Not a bad thing. But that person who has a lower score still has more of an opportunity to enter into the housing game by getting, they're eliminated from these adjustments. So this creates a less aggressive hit and adjustment to their rate that they would have gotten before, that they're eliminated for. Now, that
Yeah.
person with the better score, they're still going to get a better rate than that person with the 620 score, right? That hasn't changed. But their cost and adjustments to the loan level pricing adjustments are going to be more for that person.
Okay.
So, do I agree with it? Does it make sense? No. But these are the changes that the agency has put into place. And I believe it's more to bridge the gap. And for
Yeah.
what they say, strengthen the sound and strength and financial abilities for Fannie Mae and Freddie Mac in the future to be able to continue to do what they do, if that makes any sense.
Yeah. Well, I hear what you're saying. So basically, they're bridging the gap, they're narrowing the gap a little bit more so that it's not so painful for someone putting a lower down payment and having lower credit scores. Correct. So at the
You
end of
nailed
the
it.
day,
You nailed it.
I think it may work out maybe in the long run, because that incremental change in fees or rate for somebody with lower credit scores and a lower down payment may result in less defaults maybe in the future, right?
Possibly.
And just give these people an opportunity also to come into the game, right? So if somebody has, like, let's say, life is life sometimes. I don't like to put blame on people because you don't know what someone may be going through or has gone through. They may have a
Sure.
lower credit score for specific reasons. I mean, we're quick in this society
Correct.
to point our fingers and say, you did this and this is your fault. You should have done this, right? But if they have a lower credit
Correct.
score and let's say they have a lower down payment, like when they see this, what's going on in the news, like how should they approach it? Like somebody in that situation, like how would you talk to them and how should they approach getting pre-approved?
One, of course, connect with a professional, knowledgeable mortgage professional who can
Okay.
break down all the details and explain it to you in layman terms and give you a detailed understanding of, based on your credit score, your down payment, and product, where you stand. Because these changes are not implemented on FHA loans, USDA loans, and FHA. Did I say FHA? It's just for conventional financing.
Okay.
What I find typically, if you're in that category, not to categorize, or you likely may not be going for conventional financing. This may have no impact or bearing for you, and those loan level pricing adjustments this scenario may not be applicable to you. Makes sense? It's strictly for conventional financing. So I say, for one, get connected with a knowledgeable loan officer who can really break down what options are available to you based on your scenario.
Okay. So it pretty much boils down to the same. It comes down to having an initial conversation. You
Correct.
collecting the documents that are necessary, right?
Correct.
And then you can review what their options are. If they're going FHA, nothing changes, right? But if they're
Correct.
going to conventional, there's going to be something more positive for them, which is
Correct.
maybe lower
It's a good
fees
way
and
to
a lower
view it.
rate, right? So it's a win-win situation. And actually, if you have a higher credit score with a higher down payment, you're still going to be paying less and overall. So at the end of the day, I feel almost that it's amazing how the media takes this story and just spins it, right?
Correct.
It
You're laying out right. I love the
Yeah.
way you're breaking this down.
Yeah, so it just basically opens opportunities for different folks understand the fact that people are in different situations, and we should strive to put as many families or individuals into home ownership as possible, especially if they can afford it. That's number one,
I agree.
responsible lending, right?
I
So
agree.
someone with higher credit scores, higher down payment, comes to you, that conversation with them.
One, I would break down the options of, hey, how do you want to utilize your funds? is it necessary to put the 20% down? Maybe there's a different path you want to take. Maybe you don't want to put that 20% down now. Maybe you want to put less of a down payment and keep some reserves and take advantage of less of adjustments to your rate, right? Maybe that money could be laid out differently. You also may have that option if you have a higher credit score and down payment to put that down payment down later on. What I mean is you can do something called recast. Recast meaning put that down payment 6 months or so later on into loan and re-amortize your loan and not get those adjustments. You want to speak to your lender and make sure that that option could be set up for you. I know here at Cardinal, we do offer the recasting option. I usually discuss those options with my clients in advance if it makes sense for them. So we'll look through and kind of analyze, does it make the best sense for you to put that 20% down now? Is the cost of the loan going to make sense for you to put that 20% down? Maybe you're better off putting lesser of a down payment based on the new agency adjustments.
Absolutely. Rebekah, I mean, this is really good information. And thank you so much for clearing that up, because like we said, like there's a lot of stuff mentioned out there that we just, and this is the point of these videos. I just want to get to the raw truth of things. But Rebekah, if someone wanted to reach out to you for more information or consultation, how do they do that?
They can reach me direct on my line, 631-742-0110. And they can reach me at Rebekah.Tardieu, Tardieu, at cardinalfinancial.com. And they can follow me on my handles on social media, LinkedIn, Instagram, Mortgages by Rebekah. You probably could just type me in and you'll find a lot of probably videos and testimonies and some of my handles out there.
Okay, perfect. All right, Rebekah, I will see you on the field. Okay.
All right, Raphael. Thank you
you
so much for having me. This has been great.
My pleasure. Okay. Take care. Bye-bye.